Good evening, you're watching Bloomberg Quint Live. My name is Ayush Alavadi and you're watching What Did You Miss?, where we bring you the highlights of the day that went by. But first up, let's take a look at the headlines at this hour. Indian markets take a breather after a record close on Wednesday. Divi's Labs ends the day close to 17% higher after the US pharma watchdog gives its Vizag plant an all clear. Jerome Powell is set to be Trump's choice to take over from Janet Yellen as the next US Federal Reserve chairman. And Bitcoin climbs past $7,000 for the first time ever, gaining more than 640% so far this year. Consolidated net profit at 2,091 crores versus a Bloomberg estimate of 2,242 crores. Consolidated revenue at 21,590 crores versus a Bloomberg estimate of 21,005 crores. Now, joining us on the phone line to dissect and analyze our top story is Jatin Damania, Assistant Vice President for Research at Kotak Securities.
Well, yeah, Jatin, if you could really tell us how does these numbers really look like? Okay, so should I repeat the numbers once again for you? There is an other income component of 880 crores. Mind you, the total revenue and the net, that is the top line and bottom line numbers, if you look at, the net has come at 2,090 crore versus the estimate of 2,240 crore. That was the Bloomberg estimate, of course. So that is the number. And if you look at the revenue, the number has come to 21,590 crore versus the estimate of 21,010 crores. So on revenue, at least we can say the top line is better than what we thought, but bottom line doesn't look that good, Jatin.
Yeah, see, top line, we were also estimating somewhere around 290. 21,900 crores. So definitely numbers were good on the top line because we were estimating that the sequential improvement will come because of the production recovery after the first 1Q FY18 volume, which affected the aluminium and the power operation. And even we have seen the zinc operation has given the good numbers on the revenue.
Well, to put things into perspective, actually the numbers, if you look at the estimates, we were really looking for bumper results, so to say, because our estimate was that PAT will grow around 80%. Because, base metal of late really have been moving up. Jatin, what's the kind of outlook that you have? And after these numbers, do you think you will need to change your projections for the full year at all, or it's more or less in line?
No, I mean, we'll look at the numbers because, see, what my feeling is that the earnings which will be led by the improvement of base metal prices and especially zinc. And we continue to believe that zinc will continue to remain strong in the coming quarters as well because of the constraint deficit. So we will continue to prefer the Vedanta over the other non-ferrous stocks.
Well, if you look at the performance so far, to what extent is it really driven by the buoyancy in base metal prices globally, and what kind of volume ramp up do you really forecast? What have you penciled into your projections going forward?
See, I mean, what we are expecting the numbers to reflect strong because that will be totally led by the only two businesses, which is zinc and aluminium.
Okay.
And that we are expecting to continue, momentum to continue at least for another couple of quarters. What's happening with China and definitely with the winter kicking in, we might see some of the production cut as well. So that would also support the prices.
Well, companies also reported that there has been a debt reduction to the tune of 11,466 crores over the last 6 months. So that's a kind of a good news, more or less in line with what you have been factoring in, Jatin, so to say.
Yes, we were estimating the debt reduction will come, and definitely we are expecting somewhere around 10,500 odd crores. So the hard debt reduction is actually a positive for the company. Definitely it will lower the interest outgo in the coming quarters.
That could be a booster. Well, we have the EBITDA number also now. The EBITDA came at 5,776 rupees. That's up roughly 24% year on year for Vedanta Limited. What's your view here, Jatin?
And need to look at the number because these numbers are looking a bit below estimate because we were expecting near about 6,170 crores. So there's almost around 400 crores of the gap in terms of the reporting number and what our estimate numbers are. So we'll relook at the line items if there is any cost pressures or probably something might be relooked at the numbers or not.
So what do you think could have been the probable reasons? There has been a lot of volatility, in base metal prices during this quarter. So do you think that could have been one of the reasons? Because Vedanta is really a processor, right? So they benefit more from the kind of margins that they get by processing the raw material.
That can be one of the possibilities, but definitely I need to look at the detailed number of the aluminium and the copper and the power front, because we have seen the last quarter alumina prices also jumped up substantially. So in that was one of the reasons why the company has given report lower than estimated EBITDA, or is there any other reason? So definitely we'll have to relook at the numbers into details before commenting it.
So what's your overall assessment, the numbers that we have shared so far? How would you really sum up these results?
I'm saying about top line looks good, but EBITDA there is a bit of disappointment, and definitely we need to find out the reason, whether it's actually the cost of production or there is another decline in the operational performance because of some other reasons.
Okay, and maybe one last question. I'll repeat what I asked earlier, because now we have detailed numbers in place and you have also talked about it. Any possibility that you will have to revise your projections for coming quarters, looking at these numbers, probability of an upgrade or downgrade?
It's too early to comment on this, because I'll have to look into the details in detail, because on the presentation everything is uploaded. So as of now, we will continue to maintain an estimate, and probably we will prefer Vedanta over the other non-ferrous stocks.
Okay. Well, Nikki Mirchandani also joins us, my colleague who tracks this company closely. Nikki.
Yeah, so it looks like a miss on the operational front, as just Jatin mentioned. Also, he said that EBITDA seemed to be a miss on operational front. Like, if we look into the press release, the company says that yes, the EBITDA has grown on 24% due to higher volumes in the three business that we were anticipating, that is the Hindustan Zinc business. But these gains have been partially offset by currency appreciation, higher cost due to input commodity inflation, and lower volume at oil and gas. So this was one of the reasons why we are seeing a miss coming in on the operational front. Also, it says that something we were also anticipating is the hit coming in from the aluminium business now. It says that the higher cost due to input commodity inflation and lower volume at both iron and gas as well as iron ore is something that has affected the margin. Now, if you look at the margin, it's come at a 26.25 as compared to 29.5%. Now, we were working with an estimate of around 30% versus a figure, the base figure of nearly 29%. So yes, it is a little disappointment coming in, but then I don't see a major dip coming in though. Pretty much, I think there is a trend which has been playing out both for ferrous as well as non-ferrous metals. Now, if you see steel, that also got impacted, higher commodity prices, and we did see some raw material cost creeping in. With Vedanta, also similar trend has played out.
Well, that's what it looks like. So some disappointment on the volume front and also margin compression because of raw material cost pressure. Jatin, if you are still with us, any comments on these details?
No, that's what I said. That's what I said, because the drag that could have come, because it will have been come because of the aluminum front only. Because alumina cost has gone up substantially in the last quarter, and that's one of the key reasons which I foresee because on the total miss on the EBITDA. And definitely the currency appreciation was factoring, but the increase in the lower volume on the oil and gas was another key reason.
Okay, so Jatin, your price target, if any, on this stock, and what's your call?
So we are currently having a positive, and we continue to maintain a positive view on the stock. And that's why I said first also, we'll be preferring Vedanta as compared to other non-ferrous in the space.
Okay, Jatin. Well, we'll leave it at that. Jatin, thanks a lot for taking time out for us. Well, these are the details on Vedanta. Slight disappointment, at least, I would say.
Right. We'll continue to be bullish on the mid-cap IT space. That's the word coming in from the founder and chief investment officer at Old Bridge Capital, Kenneth Andrade, speaking to Bloomberg Quint on our new series, which starts from today, Alpha Moguls. Andrade further states that cement companies will not have a terrible time, even in the worst periods. Here's an excerpt of that conversation.
I think the entire spectrum of all the companies there, the valuations are in your favor. Okay, so save a company or two which is struggling with growth. I think everyone else is quite okay. I mean, even in some of the large cap IT names, there are verticals out there which are done reasonably.
Yes.
Yes, and that's what's showing up in mid cap IT.
Because the mid cap IT is but a vertical of a large cap IT company, so to say.
So that's what you're getting. That's what's showing up in the output.
Okay. So you would be bullish on mid cap IT?
So we've got a couple of names there. Yeah.
Okay. Yes, I do. I do know. Okay. So mid cap IT, and you would be continuing to be bullish on that. What about pharma? Is it as good a play as IT is right now?
We are biding our time on that sector still.
Okay. Reason being?
I think prices have come off. Valuations are good. Okay. But we still think that the cycle could take some time to stabilize.
Okay. What about the smaller manufacturing, auto components, textiles? I mean, gems and jewelry I'm completely ignoring, but anything that is worth, I mean, auto components I guess would probably still be worth looking at because there is some size there.
Yes, but we're not very comfortable with the valuation stack up.
Okay, you're not comfortable with that as well. In fact, I remember a very interesting conversation which I read from one of your earlier interviews wherein you mentioned that all you got to do probably is go out and buy valuations. Don't really bother too much about large sectors and which sector will make money. If the valuations are in your favor over a period of 3-5 years, you will make money there.
Yes.
That's not the logic for IT though, but is that logic applicable to any of the other themes right now?
It's applicable for all businesses, right?
Okay, fair call.
Okay, so I mean, if you, irrespective of how you want to time a sector on the upside, I think the only quantitative data point that you have is valuations. And the minute you buy cheap, okay, and you notice that the industry is consolidating, I think you got something out there in terms of an idea. So if you can put 5 of these ideas together in your portfolio, I mean, not all of them will participate together.
Sure.
Okay, but each one will take a lead at a very different period of time, which keeps your portfolio reasonably evergreen.
Okay, so where is there a like for example, scuttlebutt investing, I would presume, would say that scream out at me and tell me a buy and I'll buy. Do you even, I mean, is it foolhardiness to even start going out and looking out for those kind of valuations right now? Is it only a relative game? I mean, don't look at 48p, but 20p could be cheap in the current market scenario.
I wouldn't, I mean, one thing that we try and avoid is look at a relative scale, because the minute you do a relative analysis, you continue to tear lower and lower in terms of the size of the company.
Got it, okay.
Okay, and the reverse logic applies. When the industry peaks out and actually is on its way down, the smaller one goes out of business faster than everybody else. So we usually stay with the largest guys in the business, okay, and we look for smaller companies if they come across who've got more efficiencies and are leading market share gains, or are leading market share gains in their category. So I think those are 2 things that we actually look for smaller companies, and we're happy to wait into the next cycle to participate with them. Okay, so you need a lot of patience if you want to play the cycle into the next corporate or the next industry cycle. Yeah,
that's scarce, right? People don't quite usually get that. I'm just referring to our off-air conversation where you mentioned it's okay to probably lose the first few years of your investing life. With time and age, you will probably get those virtues as well.
Yes, I mean, you have to stop making those mistakes, then everything else is okay.
Okay, stop making mistakes. I think that's a key word. Easy to say. Kenneth says it as if it's something that very, very easy, maybe easy for him to follow, but yeah, I guess difficult for a lot of others. Kenneth, let's talk about a couple of, say, domestic economy facing spaces. I know you look at valuations keenly, but one pocket that is probably not the best of valuations, but is showing growth, has shown growth this quarter to, is cement. Where are you out there?
Again, it's a large industry. It's done extremely well. I mean, you hardly find any distress in that business.
Yeah.
Okay, and both from a point of capacity utilizations and in terms of pricing, I can't fault any of these businesses. Okay, but when it comes to valuations, I'm not too sure at what terminal value you could actually give a business like this. Okay, so I So when all the questions are not answered as far as what price point to get into, you normally take a step back on this one.
So you may not buy into it, but just looking at the fact that there are no new capacities getting added, and with this whole focus on infrastructure, so on and so forth, but we will talk about that as well. If they don't have splendid times, would it be fair to assume that cement companies might not really have a terrible time?
They're not going to have a terrible time.
They're not going to have a terrible time.
I mean, even in the worst periods of time, they didn't have a terrible time.
Okay.
So it's a very low, robust sector in that sense of the world.
Well, that's a really interesting chat that Neeraj had with Kenneth Andrade, and you can catch that entire interview after the show at 4:30 p.m. today. Now, moving on, Divi's Laboratories jumped over 16% after the US drug regulator lifts an import alert on its facility in Visakhapatnam. Darshan Mehta, Bloomberg Quint, is standing by with more. Darshan, I'm guessing this comes as a big relief for Divi's.
Yeah, it does, because this was one of the biggest overhangs that Divi's had. What had happened was last year the US FDA came and inspected the plant of Divi's, in which they gave a Form 483 with 5 observations. Later it came out to know that it was serious in nature, and then the US FDA put an import alert, and then came a warning letter. An import alert means that Divi's was not allowed to export anything out of that. But due to shortages in the US markets, some products, or a lot of products, were allowed to be exported. Now then there was this re-inspection that happened a couple of months ago, and now they've been cleared totally. So what this means financially, since most of the products were already being exported, financially doesn't make much of a difference, but sentimentally it's a big boost, because now they can go ahead with their expansion, they can go ahead and export the other products also. So that's a big plus point that's coming in for Divi's, and that is why the big sentimental overhang of a US FDA import alert is lifted. The counter was up almost 16% in trade today.
Darshan, thanks so much for that update. Now, Power Grid is expected to report a strong September quarter backed by higher commissioning. However, the street will be watching out for the management's commentary on capex guidance for the current financial year. Let's head across straight to Jayesh Khilnani, who's standing by with the estimates. Jayesh, what are we really expecting?
Alex, we are expecting a strong quarter backed by regulated equity income that Power Grid is expected to get. Now, in terms of numbers, we are expecting revenue to grow at about 18% to 7376 crores, EBITDA likely to come up 15% at 6472 crores, and net profit likely to be up 14% at just over 2100 crores. As far as segmental performance is concerned, the transmission and consulting business revenue is expected to grow in the range of about 20 to 22%. Like you mentioned, tomorrow is the press conference, so we'll be watching out for the management commentary to see what guidance they give and what are the other key takeaways that we can have from that. Also, the commissioning aspect which you mentioned, so we're expecting commissioning to come in at around 7,000 to 8,000 crores for that quarter, for the quarter. And just to go by what the stock did today, it ended at the high point of the day, which means that probably the market is expecting good numbers from Power Grid.
All right, thanks so much for that update. Now, moving on, the IPO fever has caught on to Khadim India as well. The 550 crore issue, which opened today, has witnessed a subscription of a 0.1 times as of 3 p.m. today. The company has priced the IPO at the 745 to 750 rupees a piece. Speaking of Bloomberg Quint, Ishani Ray, the CFO of Khadim India, laid out her expansion plans and how exactly the proceeds of the IPO will be used. Listen in.
We are very optimistic about West and North, particularly West, because over the last 1 year we have opened around 6 stores in and around Bombay, and those stores are doing reasonably well. So we are optimistic about West. Other than Mumbai, we already have stores in other parts of Maharashtra as well as Gujarat. So going forward, we will be looking at stores in other regions also. On an average, we do open about 70 stores year on year. That's what we have been doing over the last 2-3 years. We populate South more through our franchisee outlets, and West and North, where there is the visibility is relatively lower. We are a newer player in those regions. We will open our company-owned, company-operated outlets.
Now, an explosion in an NTPC boiler in Raebareli has led to the death of at least 26 individuals so far. About 80 people were rushed to the Raebareli NTPC hospital, many of whom were severely injured. The boiler was part of the corporation's Unchahar plant, which had recently set a national record with 686 days of continuous generation. Uttar Pradesh Chief Minister has announced a compensation of 2 lakhs each for the families of the deceased and 50,000 rupees for the grievously injured. Engineers working in the plant are now demanding a safety audit of the site. The 1,550 megawatt plant supplies electricity to 9 states, according to officials and employees, around 870 people. Uzbek immigrant Saipov, who has been accused of killing 8 people in an ISIS-inspired attack in New York, has today been charged with terrorism offenses by the U.S. prosecutor. Now, while the prosecutor said that the attack was carried out to inflict maximum damage against civilians, President Trump tweeted that the immigrant, who was happy as he asked to hang an IS flag in his hospital room, must be given a death penalty. After months of speculation, President Trump is set to select Jerome Powell to be the next Fed chair. Bloomberg's Enda Curran weighs in on the expectations from the possible Fed chair pick.
On monetary policy, it should be more of the same kind of gradual path towards tightening policy. He's outlined this in speeches, he's spoken about it publicly. It would be quite an about turn if he was to suddenly become more hawkish. Obviously, data would dictate it. The difference, of course, might come on the regulation side of things. So there's a sense and a view there that he might start watering down some of those regulations, which fits, of course, with the administration's overarching theme. And, of course, there's a view out there among the banking community that that's what they need. But for emerging markets in the likes of Asia, I think the feeling is one of perhaps relief in that it's a little bit of the devil you know better than the devil you don't know.
Social media giant Facebook's revenue for the third quarter jumped 47%, beating the highest analyst estimates. But the blockbuster earnings landed when the company was being grilled by US lawmakers. Now, Facebook said they will invest more in security and intelligence capabilities to tackle the fake news problem. Bloomberg's Sarah Fryer reports.
Facebook reported record revenue and profit, but its earnings report was overshadowed by a bigger issue: the Russian influence on its platform ahead of the U.S. presidential election. That was the subject of several Senate hearings and congressional hearings today. The company said that they are going to invest so much in fixing the problem by doubling its security staff and otherwise trying to improve its intelligence capabilities that it will actually hurt its profits in the futures. Shares slipped slightly on the company's announcement that it would actually be almost doubling or more than doubling its spending next year in order to address not just the security issues, but also invest in new initiatives, business initiatives that they haven't quite figured out how to monetize, like video and artificial intelligence, virtual reality, all these new things that Facebook is counting on to bring its revenue growth in the future. Facebook's General Counsel Colin Stretch spent all day answering questions from senators about how dedicated the company really was to solving this issue. It was an interesting contrast to Mark Zuckerberg, who today had to answer to investors why it was a good business decision to invest in security. He told them that it doesn't matter how well they connect the world to the internet if they don't have a good experience on the platform, and certainly these posts are not a good experience.
Now, it's no secret that Bitcoin's meteoric rise is attracting a ton of attention. It's actually crossed $7,000 for the first time ever. But the real question is it ready for the mainstream? Have a look.
Bitcoin's meteoric rise is attracting a ton of attention. But is it ready for the mainstream? JP Morgan Chase CEO Jamie Dimon recently called Bitcoin a fraud and said that cryptocurrency prices are in a bubble that will eventually burst. Many investors have stayed on the sidelines as cryptocurrencies are seen as too volatile and don't have the safeguards that most financial assets do. A number of hedge funds, however, are investing in cryptocurrencies, and Goldman Sachs is reportedly exploring how it could help clients trade digital tokens. Other companies are stepping up efforts to bring cryptocurrency to the mainstream, opening regulated exchanges, creating futures contracts, and attempting to list exchange-traded funds. The recent surge in cryptocurrency prices has coincided with a flood of interest about the blockchain technology behind Bitcoin, which uses a decentralized and public ledger of transactions that can't be manipulated. IBM, Microsoft, and Toyota have all invested in blockchain and are looking at potential applications ranging from food safety to driverless cars. So what is preventing even more widespread adoption? Regulation, or the lack thereof. In July 2017, the SEC announced that federal securities law may apply to some cryptocurrencies without providing concrete guidelines to determine which ones. Meanwhile, China has outright banned ICOs, or initial coin offerings, along with the exchanges where coins are traded. Guidelines for individuals that mine and trade cryptocurrencies also vary wildly, with countries like Venezuela going as far as putting miners in jail. So what's next in the year ahead? The cryptocurrency community is eager for clarity from regulators on ICOs, trading, mining, and taxes. As that happens, more investors and end users could dip their toes in the water. Many have compared the current state of blockchain to the early days of the internet, a digital Wild West teeming with opportunity. And just like the internet, there will likely be winners and losers.
Well, we really hope you've caught up with all the news of the day on this edition of What Did You Miss? For more news and updates, stay tuned to Bloomberg Quint.